Okay, MC, let's kick this thing off today, all right? Welcome back to the damn channel. It's your boy D, right? This is D's Daily DD. If you don't know by now, all right? So remember, I'm not a financial advisor. I'm not a financial planner. This is not financial advice, so don't take it as that. Take it for educational and entertainment purposes only, all right? So today's just going to be a quick recap, guys. Not a lot going on. I was mostly paying attention to what Fed Powell was doing and if they were going to, kick off the interest hike, and they did. They raised it another 0.75 basis points, right? And that's actually a big hit. It seems like it's not a lot. It's actually big, right? So how does this affect everybody? Your average retail investor, your average person, your average worker, it's going to make credit card debt more expensive. All right. So when you're buying groceries with a credit card or gas or whatever you need to buy, right, if you're in that position where you have to use your credit card over time, right, interest is going to keep going up now, and they keep raising it. So it's going to cost you more to pay that back. All right. That's the bad news. The good news is for AMC and GME and all these shorted stocks, that it also becomes more expensive for the shorts, right? Anytime money becomes more expensive, and we're gonna kind of take a look on the charts on that, see the dates and what happened right after, right? So, I'm here to bring you the best information, the important information, right? What you need to know, guys. So consider, subscribing, consider hitting that like button, right? The notification bell, so you know when I upload a video, because you don't want to miss when I upload a video, and I upload often, all right? And I'm here to give it to you raw, real, as uncut. I don't have a script or nothing like that, right? I just go off top of the dome and I just give you my thoughts and opinions on what is happening. So let's jump into the info. I really want to make this a quick video today. Cool. Let's go into the internet, and this is the news. Before we jump into that, right? So into the charts, we're going to talk about this. Fed makes history with second massive rate hike in as many months, right? What seemed unfathomable just 6 months ago, a 75 basis point rate hike by Federal Reserve, has now happened twice in a row this year, right? At the conclusion of its July monetary policy making meeting, members of the U.S. Central Bank and Wednesday once again approved a supersized interest rate hike of 3/4 of a percentage point. Members voted unanimously in favor of the aggressive more tackle white hot inflation. Move to tackle, the inflation. That's all you really need to know, right? It's in effect. I'm not going to go through this whole article. If you want to read it on your own, put the link down below. But it did pass. So I went back and I looked and I said, all right, well, what happened when they raised their interest rate? So they did it in March, and they did it on June 15 as well, right? So the 0.75 was on June 15. This was the last time. So I went back to the charts and I was looking for June 15th. Here, hold on. So June 15 was right here, right? So what happened afterwards, guys? It wasn't immediate, right? So you can see this is the daily chart. So on the 15th, not too long after, we had a push up, right? And then another one over here, right? So yeah, we had a pullback recently. It is catching, it's bouncing. I said if we can catch some support here, right? I think we can start to make our way back up. But actually for tomorrow, I am not so bullish, right? Because we're gonna go back to the SPY over here. So on the SPY, the same thing, right? So I went back to June 15th. So what happened the day after June 15th? All right, massive sell-off, right? That interest rate hike went through, it went up, and the chart, there was a nasty sell-off in the market the next day, okay? So today, because of where we're at, I think the same thing is going to happen, in my opinion, right? So we are at this 400. I think tomorrow we will actually see a red day, because all that hits, and they try to price everything, and the market tries to price everything in as fast as it can. So same thing, if we're going to get pulled down by the market tomorrow, then AMC, unfortunately, it's going to break my prediction that I have here, this orange line, just in the short term, okay? But in the long term, right? And it's interesting, again, we got the earnings coming up and so on, and we have the pounds coming up. It could kick it off so we can start making up our way up. All right. And the next thing I want to show you is going to be this Fibonacci retracement. So once you have a stock that's going down, this will kind of give you a guide. I do believe we've seen the bottom because of this, right? When you do the extension, you take the top and the bottom, and look how perfect it is, right? It bounced off of here. It's trying to make its way up now, right? Once we can get up to 24, 25, that's when we can expect the reversal to start kicking off, right? This was a long time that it went down. Now it's time, in my opinion, for it to come back and start making its way up. And that's one way, right? The interest rate hike. It's making money, it's making borrowing money in any form or fashion, right? Shorts are borrowing money when they're basically shorting, they're borrowing shares, right? They have to pay them back. So when they borrow, there's a cost to borrow fee they have to pay. So I'm sure it's going to make it a little more tough for them. And then in March, right? So the last time we had was March something around here. And what happened shortly after with the price of AMC, right? We had a huge rally. All right, so that's my prediction right now. I think we can get this bounce. Well, in the short term, we're probably going to come back down maybe to this support around 1250, right? And then we can start making our way back up, all right? Because of, again, the shorts are in a tight spot. Their positions are just getting more and more expensive as we go on, right? So something to remember. This refers to, the pounds, I think, because Adam Aaron was talking about it in that video that was floating around where he was, the premiere for Nope. And never forget, on January 27, 2021, broker-dealers traded over 1.2 billion shares of AMC, while only 330,000 shares had been the outstanding publicly available float at the time. That's a new shareholder base every 15 minutes, artificially affecting the supply and demand, and broke the Finner rule of 2020. And that's what I talked about yesterday in my video, guys, about the synthetics. If they dilute the pool, right, because they're adding synthetics, the short sellers, the banks, and all that, they're diluting the share price. They're diluting what is the AMC share is worth, right? So in my opinion, that's when we see the real price of AMC, right? When they cover those fake shares, the borrowed shares, you'll see AMC go up, all right? And when it will stop, the peak, I don't know. But either way, check out this retracement. Either way, guess what it's showing? The peak would be around almost 300, right? 280 right here. This is what it would show as a reversal peak, all right? So take that into consideration, guys. Just real quick to look at the, Stonko tracker, 7.2%, 9,000 calls in the money. So we're going to jump over to the options chain. And in my opinion, $17 to $20, guys, that's the breaking point. We can pass $20. I think that's when they start to really, shit their pants as far as the sweats, right? Or the sweats, the shorts. There will be sweating their asses off, though, because check this out. So at 17, right, we have 7,000 calls. At 20, we have 10,000 calls. And then we go down to the puts for this week. Even though I'm expecting some bearish action tomorrow because of the past action, right here, watch, $20, or actually, sorry, after $17 on the put side, they have nothing, right? That's when it calms down. There's not a lot of pressure after that, right? So meaning if we can get all the puts out of the money here, that's a lot of pressure right there, selling pressure that would be removed, and it would be easier for us to start moving up, right? As far as AMC, the SPY, guys, like I just told you, it didn't quite exactly come up to this EMA. I expect a red day tomorrow because of this news. Even though it went up to 401 and we haven't seen that, I don't think it's ready to start making its way up. I could be wrong, but just by past examples, I expect at least it to come down to around this level, right? 390, 393. Okay. GME had a nice, push today. Nothing crazy. It was up like 3%, 4.16%, right? And it's still holding the green super trend, right? So we want to see if it can start to make its way up. But again, it could weaken because of tomorrow. If the overall market brings it with it, it's going to bring it down, right? And then we would have this support down here around $25. 7,000 shares left to short, almost 50%. I would say 50% of the float is locked up, free float locked, right, from the shareholders. And you have 19,000 calls in the money currently. And not much, I just want to give you a different source. 32% short interest. But the main point today, guys, is that Jerome Powell, right, is hurting the shorts, in my opinion. I believe, because he is raising the interest rates, it makes money, it makes borrowing more expensive, right? And I'm explaining to you both sides. On the consumer side, right, when your gas, if you're going out to eat, you're going to groceries and you're using a credit card, it's going to cost you more money to pay it back, right? And then as far as the shorts, they're borrowing money, they're borrowing shares, so it's going to make it more expensive for them to borrow. And we've seen in the past, it's not the short term, but midterm and the long term. We've seen the AMC price, make its way up since those rate hikes. Okay, so that's my thoughts, my opinion today, guys. The information I got for you. So until the next one, catch you guys in the next one. Peace out.